It's February 24th, 2014. Current time is 20:30 GMT. Jay Meisler from GVI Forex on global-view.com. Normally I do a daily Forex trading outlook, but I think today I did one this morning, and now I think I'm going to do a little bit different one and discuss the current state of the market. As most know, we've been in frustrating markets since the start of the year. Lack of trend has been really a dominant theme. Equities seem to be more of a focus than even gold and the dollar. The dollar just keeps in its chop, and it's frustrating to anybody looking for a trend when we start out on a very hopeful note this year. Now, one thing I've written about, and I want to reemphasize now, is the Forex market tends to trade best when there's a crisis or when some central bank is leading it. In the old days, this is a change from the old days when I first started, when the central bank trying to lead the market would be like a red flag, and you'd go after them until you knock them out of the market. Now the market seems to prefer to be led with whether it's a crisis or by central bank guidance. You can see what's happening in the stock market. The forward guidance of no hiking rates for quite a bit of time is helping to keep the liquidity punch bowl alive, even as the Fed tapers. So here's what happens when we're not, we didn't have a crisis last year. We almost had one with Cyprus, but that blew over. This year we started with an emerging market crisis that never really got to the boiling point. And the Forex market has trouble trading that way. Forex trades best when there's a flight to safety, attack on a weak currency and so forth. Doesn't know how to deal with prosperity. In this case, prosperity is a global economy that's growing, although it's subpar growth and slow growth. It is growing, and that's why it's having difficulty. And that's why I said earlier today, and I said last week again, that the best hope for some central bank to give us a green light would be the ECB, and that's still. You'll see in my newsletter for March I deal with this, but that's where the focus is, on the ECB meeting next week on inflation figures, and maybe it's more hope than anything else that they will finally cut rates or do QE or something that would give us a green light to trade. The other green light currencies, things like the Aussie and the yen, have so far run out of some steam. Aussie because their central bank is no longer aggressively cutting rates, and in the yen's case, it looks like next round of monetary ease may be even this summer, if you believe what you heard from some Japanese officials today. So without that, the Forex market is floundering. It wants the dollar higher, especially against the euro, but it's and the yen for sure, and the Aussie, but it can't just build the momentum, and we're just kind of stuck in these ranges. If you look quickly, and I'll do this real quick, at the daily chart, we broke in the Eurodollar. We broke this trend line here finally, but only marginally, and we've been flat basically for the last 5 days in essentially a 100 pip range, 136.75, say to 137.75. If you look at even it goes down to a 5-minute chart today, which will be interesting, just from the perspective of, you can see what's happening here. It's when there are no stops to run, it just tends to go flat. You saw it in the 1 hour as well. But these are times when you have to be on alert, because when you get complacent, that's when you get big moves. But I think we have another week and a half into the ECB meeting, and there'll be a lot of speculation ahead of that. But until and even until Friday, when we see the inflation numbers, that's going to give you at least a heads up where there'll be any pressure building for an ECB rate cut. We'll see. Watch my newsletter this weekend. But for now, as I'm trying to explain why it's without a crisis or without central banks giving a green light, this market is struggling, and that's why the next hope is the ECB. But right now, it's only hope that they'll give us a trend. Now, one word, if you look at the bottom of the screen, you'll see a link for tradersadvocate.com. That's our advocacy site. We have some phenomenal content there, as well as a great welcoming package, but the content has some perspectives that you might not find elsewhere. So, to support our effort, we really encourage you to click on the link, join, read our content, and get our welcoming package.